What is going on YouTube? It's Brendan from Market Makers. The bloodbath, the collapse continues as predicted. Guys, if you didn't watch the 7-year apocalypse video I did a week or two ago, watch that video, watch my most recent market collapse video, and let's dive into this. Because right now we have the S&P down over 4%. We have the Russell down over 4%. We have the Nasdaq down almost 5.25%. Everything is turning down, and Bitcoin on my screen is trading at 20,259. Bitcoin is down 9.52%. How can all of this be predicted? I want to take a minute to teach you guys some concepts here in natural law trading, and we're going to jump into the TX. And I know a lot of you keep asking me, because I answer all the comments, guys, Brendan, where did you learn this from? Is there a course I can take? How did you learn this? When I started trading over 20 years ago, I had to read books. I read the masters. I read Charles Dow. I read all of the articles he wrote. He didn't write anything called Dow theory. That came after him, people naming it after him. Charles Dow was the first one to marry natural law trading to the marketplace. He had 3 key retracements. He believed in the law of 3. He constantly wrote about how the markets move like the tides, price moves in waves. Gann took this to the next level, studying the Bible, studying ancient texts. He even studied astrological patterns, planetary alignments, and the market pattern on my screen is a Gann market pattern married to fibs by me. I named it the price pulse pattern. And when people say, you lost me when you said Gann studied astrological concepts. Gann studied any type of esoteric knowledge that could help him in trading. Fibonacci numbers are esoteric knowledge. They help you in trading. They are natural law trading. Gann, by the way, is the most successful documented trader of all time, winning some crazy percentage, like 87, 84% of his trades that he took, documented. So you should check that out. But guys, how can Fibonacci have helped you here in Bitcoin? We're gonna go to the TA, but a lot of you are asking me this question, so let me show you this. If you understand the macro market cycle, it doesn't matter how much you love Bitcoin. It doesn't matter how much you love Apple stock. You have to understand, when you are in a bubble, when you are in a 3 sigma bubble, 3 standard deviations away from trend, it doesn't matter what the people on Twitter say. Oh, Bitcoin has never lost their previous all-time high. Bitcoin will never lose 28K in my lifetime. Bitcoin will never lose 20K. The bottom is in. Look at the hash rate. None of this matters. When the master comes, he will put you to the knee, and the master is the cycle that you are trading in, okay? Look at this. So with Fibonacci, you get all of the answers. You start at the pandemic low, come up to the previous all-time high, down to that market low. This is when I came to crypto last year into the marketplace. I missed this big drop. I came down here in the trough. What did this do for the run up? It gave you the 618 at 66,523. Is it exact? No, but we were able to enter some trades here. I was able to enter a trade, one of my biggest trades at the time, right here, and capture this because we were battling the 200 and 233. I think it was a 4-hour time frame, 12,000 point drop. Able to short up here. Let's continue with Fibonacci and walk through this, okay? Trend-based fib, guys. This is a wave projection based on natural law trading. This is how I developed this pattern as well. If we go ahead to that market low at the time, to that current all-time high, to that first drop, where did price hit? Almost to the dollar, 48,289. If you look at where price got, 48,240, and you guys that have been watching my channel, I talked about it as it set up for days short at 48,266. That's what I'm doing because I don't give financial advice. 48,266, you captured a 46% decline here, a 60+% decline if you held it all the way down. This is how you make big money in the markets, is understanding key concepts like natural law trading, esoteric patterns such as the 7-year apocalypse, trading in a shmita cycle. And where are we now, guys? Bitcoin's losing support. How did we get this number down here? The 1618 that you see, Bitcoin coming to 10,591. This again is part of my esoteric pattern here. And when you go from the previous all-time high to that market low to the current all-time high, look where the 1618 lands you, 10,591. When you marry this with my other pattern, Dante's descent, 11 candle drops, 9 bar run-ups, 20 bars between swing highs here, and no swing high was defeated. You get the same exact price drop here to 10,591. That is the average of this red box and this red box, comes out to the size of this red box, which lands you almost to the dollar at 10,591. If you understand Bitcoin was trading in this pattern, I wasn't worried about it breaking 25,214. If you think all of this is BS, then of course you wouldn't even care about what this pattern says. But guess what? You wouldn't be taking these trades that I've been taking and making the money that you could possibly be making. Okay, so this is where we're at in the pattern. And again, October 31st, this is going, if this pattern holds true, which it's 2/3 of the way through, it's going to make a temporary bottom. If you watch the market collapse video, you know coming out of September into October, we are exiting the shmita year. This year, the 7-year apocalypse, we will get an accelerated decline. That decline is going to drop us to this level, okay, October 31st. We're going to drop on that level. However, if this is anything like the great financial crisis in '08, if this is anything like the dot-com bubble, this is not the true bottom. The true bottom comes the year after the shmita. The shmita ends this September, Elul 29, going into October. It's next year. So if we look at the great financial crisis, the market made a bottom March 2009 at 666 on the S&P. The market made a bottom. But if you look at the equities crash, because that was a housing crash, if you look at the equities crash and .com, your bottom came the following year after the shmita in September, October. I think it's going to play out that way because we're doing both bubbles at the same time with bonds as well. So I think this takes more time to unwind. I would be surprised if we bottom out in March. I think it's going to go to September, October, because I think next year is going to be the year of the bear, which, by the way, Gann predicted in his 10-year market cycle. Next year would be the year of the bear. So, guys, there's a lot of knowledge out there about trading if you apply yourself, if you have an open mind. Speaking of open minds, guys, we have a Rumble. Check out the Jonathan Cahn shmita DVD. It is uploaded in full on our Rumble. It's in the video description. You can click that link, follow us there, give us a follow. I'll be uploading exclusive content like that DVD there that you guys can watch, educate yourselves, and hopefully become better traders. If you want to support this channel, definitely like and subscribe, and check out our platforms. Our 2 longtime sponsors, SimpleFX to trade all the equities, $5,000 bonus, tutorial video in the video description, as well as the link. You need our link to get that bonus. It is exclusive to market makers. Nobody else can offer it to you. It is a double bonus, double what anybody else can offer. That's because we trade a lot of equities there. And BITGET, our longest term sponsor, guys, fantastic platform. We're the OGs on BITGET. When we were a little itty bitty channel, BITGET came to us and we've been working with them. We've helped them improve their app. They have a fantastic platform, and now you see some of the biggest names in the industry repping them, but we're the OGs with BITGET. So definitely check out BITGET with our link as well. It helps support our work. So this is what I'm looking at here, guys, on this pattern of descent for Dante. If we go ahead and go up to the daily time frame here, what does this mean? Well, right now, because the markets are selling off so hard, you're going to have a lot of descent occurring. So they're going to look for a bottom. I don't think Bitcoin's going to lose this until the markets give up their complete pump. I'll show you when we get to the market charts, okay? But if we just want to look at some wave projections, a tighter wave projection here on the daily time frame, look exactly where you found support, the 382. Literally on the dollar, you're resting on it right now. The 618, as you can see, is key here. If you lose this 618, if you were to broadcast this line out, you're losing all of this support. You have a bias to go to the 1 fib at 16,083. The 618 is at 18,646. The 382, what you're resting on now, is 20,229. 0.5 at 19,437. We could be trying to put a bottom in here so we can get some momentum to try to recover some of this lost area. We'll have to see how this plays out. We don't know yet. You could start rebounding, make a lower high here, and get a double top type structure to descend. Remember, going into the end of September, as we approach the end of September, accelerated decline. Watch that market collapse video. We spent a lot of time on it, okay? And that's what I'm looking for, is that accelerated decline down. And that will get us to our 10,591 number, if not lower. A lot of people are asking what my overall target is. I've gone over it many videos, but for me, it's the pandemic low, 3,800. That's what I'm looking for Bitcoin to make most likely next year. Okay. Oh, by the way, I was talking to Craig today, Crypto Savvy. When I first came to crypto, didn't know how YouTube worked or anything. I came from, I came from the investment bank. He was one of the only people to talk to me, and he's a really nice guy. And we did a live stream together a few months back, and it was a lot of fun. And I can tell you, the two channels that I know, my channel and his channel, he's been nailing this descent the same way I have. He uses different techniques. He obviously uses Elliott Wave and other techniques, but he's a good friend. And anyways, we're going to do another live stream, so I'll keep you guys updated about that. We'll post the videos on our respective channels as well, but it'll be a lot of fun because his views on the markets in a lot of ways align with mine, but it's a different perspective. So it's always good to have different perspectives. So we'll see how this plays out here, guys. It's the daily. It just happened today. The CPI came in super hot. I probably should have led with that. When I say super hot, it went up. Everybody expected it to go down. Every single category went up. Most importantly, core went up. Core doubled. That's what the Fed tracks. And gasoline, which you guys in the UK and the rest of Europe call petrol, that's the only category that went down. Everything else went up. This all but cements the 75 basis point hike the Fed wants to do. And now there's a 20% chance being priced into the market for a 100 basis point hike. This will give us the highest rates we have had in over 2 decades. There's a lot of conversation about the market can even handle that kind of rate. So we're going to see quantitative tightening starting this month, 100 billion a month. The Fed's going to jam in another big rate hike. Paint me the bullish picture, my friends. A lot of you wanted me to play devil's advocate in the comments. Well, can you tell us how we get bullish? Here's my thing. I want to do it here on video. I'll do it quickly. We have 40-year high inflation that's not under control because inflation moves in waves. We have the Fed raising rates to levels we have not seen in 20 years. We have the quickest 6-month decline in the S&P not seen since the 1930s when the market went down 84%. We have a slew of metrics copying identically, such as the rise of the dollar, the 20-year high on the dollar, copying the previous bubbles. You have to be aware of what's happening in the macro marketplace, guys. We have unemployment still very low. That has to be ratcheted up. The Fed has said it has to be ratcheted up. They have to slow the economy. If you're slowing the economy, which they politely say, crushing demand. If you're slowing the economy and crushing demand, that means unemployment goes up. That means mortgage rates go up. That means people have less money. That means some people aren't going to have jobs. I can't paint you the bullish picture because what's the bullish picture? You're in a bubble. The bubble has popped. It's descending. The bullish picture can be painted in very small. It can be painted in rallies. You can trade rallies, but the overall primary direction, my friends, is down. And you can see this with the application of a simple trend line. I'll do it here. The application of a simple trend line on a chart. You can draw this trend line connecting your all-time high to that B wave swing high right down here, and you didn't even get to the trend line. You're going to adhere most likely to this trend line as you descend down to 10,591. So just be ready for that, guys, because people on YouTube are confused. Some of the people on YouTube, there's people posting 130K videos. 130K, you won't believe this pattern, came out a day or two ago, and a lot of these guys are young. When I say young, like they were breastfeeding during the 08 financial crisis, okay? But they have hundreds of thousands of young people following them and hanging on every word. But what you have to understand is the macro market cycle, and the business media doesn't understand it, and neither does the crypto media here on YouTube. So when you look at this, we're holding on to the 382. Let's go ahead and go to the 8-hour time frame. 8 hour, we pumped up to the 233. We got above our 618 on our speed fan, and look what we're bouncing off of. This is the magic of natural law trading, guys. Look what you're bouncing off of, the 786, right on the fib. You're oversold or overbought on the MFI. And, if you guys aren't using the MFI, again, we give this indicator away for free. It's customized. If you join us, the join button underneath the video. But download it from TradingView. They have their own version of MFI, and other people have other MFIs, but you should use it. It's a volume-weighted RSI, very accurate. I mean, look at this. It gave you the top, okay? It gave you the top. Set your settings to 90-10, not 80-20. 90-10 is how the creators designed it for overbought and oversold. So let's go ahead and continue through here. And looking at Bitcoin on the 4-hour, about to fall through Ichi as well. Again, this is a big drop. You know, we had a big drop because of the sell-off, and of course, Bitcoin's going to react the same way the Russell reacts, so we're going to have to jump to that as well. But we have to have this settle. You're getting some demand wick here on the 4-hour time frame. Maybe you can hold this as support, march back up, and maybe this gives you your next top, okay? We don't know yet. It's even on the 4-hour time frame, it's 2 candles. So maybe you can do something like this and start working your way back up, and maybe this ends up giving you a larger, broader double top, something like that, okay? Then you got to watch your neckline. So we'll see if the markets can settle or if they continue to sell off tomorrow. And typically the selling can pick up in the last hour of the day as well. So let's jump over to equities and see what's happening here. Let's go ahead and start off on the S&P. S&P. If we look at the S&P, I put my Gann market pattern on here as well, my price pulse pattern. I believe this is how this is going to play out. Here's your 45 angle from your all-time high. Here's your 45 angle from your pandemic low. And you already have your wave 1, your wave 2, your wave 3 complete. You're in the middle of your A wave of your A, B, C correction. Again, I married this to fibs. I took most of the fib levels off from my projections so it doesn't make the screen too clouded for you or crowded for you. But you can see what's happening now with price. I anticipate price coming down here down to this A wave level of 31.55 right here, okay? So you could come down. This is the other area you can bounce from, the 618, 35.93, and you could try to hold that level. You might get some type of little bounce and then come back down to this level, okay? But this is the 200, 233. We went over this yesterday. If you lose that, which could very easily happen here at the end of September going into October if the accelerated decline. If you lose this, this is when you start getting big, rapid movements in the market, trying to hold this area here. And if you play out like you did in '08 and you play out like you did in the dot-com crash, you'll come back up to back test this after this decline. And that's when, if you fail, that's your next leg down to your bottom, okay? Your next leg down, again, the 1618 at 2409. That's what we're looking at on the S&P. And of course, if you measure this, it just magically, took it away. If you measure this, it magically comes out to 50% on the dollar, okay? On the dollar, it comes out to 50% decline. So this is what I think is going to happen, these macro movements. We're not trading with these Gann market patterns, guys. It's forecasting. We're trading on the smaller time frames using Fibonacci, using angles, and using news and everything else combined to give us some direction in the marketplace. But I think this is how this is going to play out. It makes sense to me. And if you look at this on the daily, yeah, we went ahead and did a trend-based fib projection for support on the way down. Lost to 618. That means your bias is to come back down to 37.57 on the S&P. It's going to put you back down here in this quadrant where you had support. That's going to be key for obvious reasons. If you lose that, you're coming back down to test your June lows. If you lose that, look out below, like I said. And this could all happen quickly. It could happen slowly. September going into October, guys. The end of the shmita year, this is going to be decline in the marketplaces, okay? Let's go ahead and look at the Nasdaq. Nasdaq went ahead and put my price pulse pattern on here as well. What I have here for the Nasdaq, you'd be losing the 200, 233, coming down to that 618 at 10,179. The Nasdaq's trading at 12,000. That's a big decline. The other option here on the macro level is bouncing off your 200, 233, doing some type of rebound like that, and then coming down, okay? So again, just forecasting this. So I wanted to draw it out. Once again, I drew this out to September for the end of the pattern for next year. Again, went over that because in the previous market cycles, I think for the equity cycle bottoming in September, October of the following year after the shmita, that makes sense because housing still looks too strong. It's going to take more time on the housing front. Nasdaq, let's go ahead and draw this as well. Trend-based fib from point B to C, up to our high here. Lost this 618. Where are all my fib levels? We got to put these on for you. See where we're at. Lost to 618, Bias is to come back down to the 1 fib, 11,817. Another couple hundred points. Wouldn't be surprised if we get there tomorrow or the day after. And this is where your bottom is. You start putting in the marketplaces, which means Bitcoin could be pulling down some more before it bottoms out, guys. And of course, if we rebound again, now that we know that we had that CPI number, the next big thing is the Fed meeting, the Fed announcement of the rate hike. So it's going to be interesting to see how the markets react to that. And if we jump over to the Russell, the kissing cousin of Bitcoin, you have the Russell, same exact market pattern. Right now, I have the Russell targeted at 1521 based on our Dante's descent pattern. This is your 200, 233. You're about to lose it, okay? So you're going to lose the 200, 233. I have you coming back up to test it at the 618 on January 2nd. Remember, that is the same date as Bitcoin, January 1st, January 2nd, that candle turnover. That would be your 9-bar run up, and then the next leg down. The Russell projected to go to 697. In yesterday's video, I showed you the collapse. I showed you that the Nasdaq would be going down 73%. Let's see what the Russell is projected to go down overall, 71, 72%. So why short one over the other? Because of all the zombie companies in the Russell. I think it has the potential to do a lot more damage, and the Nasdaq recovers better because it has those big blue chip tech stocks in it, such as Apple, okay? I don't want to be in there when that thing rebounds. I like shorting the Russell, and I like trading Bitcoin ups and downs because they're very predictable. Well, as predictable as crypto can be, but it's very predictable. So this is what I'm looking at, that ultimate target, massive descent. Guys, you can make a lot of money trading these marketplaces. So just apply yourself, just spend some time watching these videos, ask me questions in the comments, consider joining our room to learn how to trade. 11,000 people there, guys. It's fantastic. Professional traders are there, awesome members. It's a great community. And looking at this on the Russell 2000, this is the Dante's descent pattern. Again, adhering just like to Bitcoin, October 31st, guys. This red box is the average of these two red boxes for the decline, which happens to match up beautifully with the 618 at 1521. Trading currently at 1821. 300-point drop between here and there. And trust me, I think it's getting there. So we shall see, and we always have this video evidence. And let's go ahead and look at the Russell on the daily really quickly. And then we'll go over to DXY, look at oil and gold if you guys are still watching. And look at the Russell here. We had our projection. I went ahead and did a down wave projection. Once again, we lost to 618. So our bias is to come to the 1 fib, 1750, guys. 1750, might not get there today, might take a couple days, might find a little bit of support here at a weaker fib level, come back up, wave around. But this is where I think you're going to try to put in a bottom, and that's what you got to try to hold, or else you're coming back down most likely to your June lows. Let's go ahead and jump over to DXY. The DXY. I love watching other YouTubers talk about the DXY. I love watching people on CNBC talk about the DXY and how the markets are going to rally based off of DXY. I want you guys to understand something. The DXY is up 17%, 18% from when the markets all topped out. It's up 17.48%. But when you watch some YouTubers who don't know how to do TA, or you listen to the business news, and I'm not throwing shade at anybody, it's just a very common thing. They get really excited about these 0.5% moves, and then it comes back up. They get excited about this, and then it comes back up. Your primary trend is literally diagonally up at like a 45-degree angle. Why? Because the Fed has to raise rates, guys. When the Fed raises rates, the dollar, the value of the dollar goes up because other parts of the world are collapsing with their economies going into recession/depressions, or they're having riots like Indonesia and Sri Lanka. So when that's happening, more money flows into the DXY. This will change if the Fed pivots because the market starts to crater and they have not vanquished inflation, because once they start printing, guess what happens? Quantity theory of money. The more of something you have, the less valuable it is. One day soon, coming to a theater near you, they'll figure that out in politics. The administration will figure that out. CNBC will figure that out. Nobody seems to understand that. Lots of YouTubers understand that. You can go on YouTube and find a lot of people talking about how inflation's made, but nobody in mainstream media media seems to understand why we have over 8% inflation, which in reality in food prices is 15 to 25% inflation. Nobody seems to understand, but it's quite simple, guys. Milton Friedman figured that out a long time ago, and many economists before him figured it out as well. I think we're pumping back up to $1.10. We'll see if we can break it this time. If you end up making a double top, coming back up here, ping-ponging, getting back up to $1.10, maybe coming back to the fan for support and trying to break out of some type of wedge here. We'll see if that plays out that way. Let's look at gold really quickly. What's happening here? Some drawings on the chart. All right, there you go. All right, so gold, of course, is dumping because the dollar's pumping and the equities are dumping. And my gold bug friends, I have a lot of gold bug friends. They get all mad at me when I talk about this. Gold went down 34% in the '08 financial crisis. That takes you down, if you pull this down, it takes you down to where the 1618 is, not coincidence, right? No coincidence in life, to 1425. Where am I buying gold? As the markets crater, this is going to do this, okay? Ups and downs, ups and downs. You're going to come down, I think, to the 1425. That's where I'm buying gold. And then when the markets recover, I'll be buying Bitcoin, I'll be buying gold, and maybe some select equities. I don't know, because I don't want my money tied up for 15 years, just like it was with the Nasdaq after the last equities bubble, okay? So we'll figure that part out. But I'm definitely trading some commodities, hard assets, and Bitcoin. And let's look at oil really quickly. Oil, guys, is still below the 300. Winter's coming. I'm waiting using the 45. This could just be ping-ponging here for a while. I want to see what happens with the conflict, what happens with energy. Really feel a lot more comfortable getting it back above these long-term moving averages, your 200, 233 here and the 300, and then I'll play it. But, maybe if it did come back down to 80 and built a base here and didn't just keep slinking down the stairs like this, if it builds a base here at 80, I might be interested in a little bit of a long. I'll share that with you if I take it. All right, guys, hope you have a fantastic day. And, watch those markets. This is going to be a lot of fun. This is going to be a wild ride, guys. I'm so glad to do this with you. And definitely follow us on our Rumble. Link in the video description. Guys, good night and good luck.